Good evening, everyone. Today we're going to do the chapter Company Accounts, and under that we're going to cover the topic Forfeiture and Reissue of Shares originally issued at premium under pro-rata basis. For this, I've selected two questions, question number 51 and 71 from T.S. Garewal textbook. So let's start. So the first question that I'm going to choose for this is question number 51. RP Limited forfeited 1,500 shares of Rahim of 10 rupees each, issued at a premium of 3 rupees per share for the non-payment of allotment and the first call money. Rahim applied for 3,000 shares. So, Rahim has been allotted 1,500 shares. Rahim applied for 3,000. So, that means this is pro-rata allotment. Naturally, Rahim would have paid excess at the time of application. So Rahim may not have kept the entire allotment money as arrears. Instead, a part of arrears would have been paid, part of allotment would have been paid by him because he paid excess money at the stage of application. So the excess will be transferred towards allotment. So let's find the breakup. 3 rupee application, 5 rupee allotment, in which 2 is towards share capital, 3 is towards SPR, 3 rupee first call, so that means another 2 rupees for final call. First call has not been called up. So the called up value at the time of forfeiture is only 8 rupees. 1,000 of the forfeited shares were reissued at 8,500 fully paid up. Past journal entries in the book of RP Limited. I would like to do the forfeiture entry and reissue entry primarily. Along with that, working notes also. Working note, this is to find the allotment in arrears of Rahim. Rahim's allotment due. Rahim has been applied 1,500 shares. Allotment rupees is 5 per share. So allotment due will be 7,500. But Rahim applied for 3,000 shares. So that means he has paid excess application money for 1,500 shares. Excess application money. Rahim applied for 3,000 shares, but Rahim was given only 1,500 shares. So the excess 1,500 shares into application money 3 rupees. This will be the total excess he has paid at the stage of application, which works out to 4,500. Therefore, allotment in arrears will be 3,000 rupees. Now, the problem is, since he is paying an excess of 4,500 rupees, how are we going to distribute this 4,000? Because allotment is 5 rupees, in which 2 will go to share capital and 3 will go to SPR account. So 1,500 into 5 is the allotment due, 7,500. Out of this, 1,500 into 2 rupees will go to share capital, which is 3,000 rupees. And 1,500 into 3 rupees will go to SPR, which is 4,500. Now, whenever a shareholder have paid excess at the stage of application, the excess will be first adjusted towards the share capital due and then to the SPR. The excess will be first adjusted towards the share capital and then to the SPR account. So that means he paid 4,500 excess. So first I'll utilize 3,000 out of this 4,000 to adjust this figure. So minus 3,000 from this 4,500. So that means he paid all money that he's supposed to pay towards share capital at the stage of allotment. So nil arrears from allotment to share capital. Whereas from allotment to SPR, at the allotment stage, he's paying 5 rupees. 2 is going to share capital, 3 is 5 for SPR. So out of SPR 4,500, the remaining 1,500. Yeah, Out of 4,500, 3,000 is utilized here. Remaining 1,500 will be adjusted here. So, the allotment due, which is nothing but the SPR due here, that is 3,000 rupees. So, allotment due is nothing but the SPR due, because whatever amount that goes from allotment to share capital is fulfilled. Allotment to SPR due only 3,000 rupees. Now, let's pass the forfeiture entry now. Share capital account data. SPR account data whenever SPR is not received. 2. Share allotment or allotment in arrears. 2. Share first call. He didn't pay allotment and first call. And 2. Share forfeiture account. At the time of forfeiture, only till first call is called up. So called up value is only till the first call. So number of shares forfeited is 1,500. Called up value will be 8 rupees per share. 8 rupees per share because 3 application, 2 allotment, 5 allotment totally, but 2 to share capital and 3 to premium. Then 3 for first call. So totally 8 rupees called up. Alright. SPR arrears we just now found it as 3,000. So 1,500 into 8 works out to, 1 second. 12,000. SPR is 3,000. Share allotment will also be the same 3,000. Share first call will be 1,500 into 3 rupees, which is 4,500. So from 15,000 rupees, 7,500 gone. Remaining 7,500 will be the share forfeiture account. That is the amount paid by Rahim, not refunded by the company, or otherwise profit on forfeiture is 7,500. Now let's pass the reissued entry. Let's read the question once again to know how many shares being reissued. 1,000 of the forfeited shares were reissued for 8,500 as fully paid up. So 1,500 shares forfeited, only 1,000 is reissued. So bank account data, 1,000 shares, but then it is reissued for a lump sum of 8,500. So we can directly debit 8,500. 2. Share capital account. It says fully paid up. So 1,000 shares into 10 rupees, 10,000. Naturally, share forfeiture, that is loss on reissue is 1,500. This is the balancing figure, which is 1,500. Now, remember, this is the profit on forfeiting 1,500 shares. And this is loss on reissue of 1,000 shares. So I need to change this to 1,000 shares. So let's do the variation. If for 1,500 shares, the profit on forfeiture is 7,500, what is for 1,000 shares? So 1,000 into 7,500 divided by 1,500. 2 zeros goes. So this means 2 by 3 into 7,500. So this works out to 5,000 rupees. So profit on forfeiting 1,000 shares is 5,000. The loss on reissue of 1,000 shares is 1,500. Hence, The remaining balance of the forfeiture account will be transferred to capital reserve. So forfeited or share forfeiture account, however you want. Retain the same name, share forfeiture account data to capital reserve. That is 5,000 minus 1,500, which is 3,500 and 3,500. So that is the answer given in the book. I passed only forfeiture entry and reissue in capital reserve, but you have to pass all the entry till the first call. So now let's do 71, which is similar to 51. Gaurav applied 5,000 shares of 10 rupees each at a premium of 2 rupee 50 paise per share. He was allotted only 2,500 shares on pro-rata basis. So naturally he paid application money for 5,000 shares. But we consider only 2,500 shares application money towards share capital. Right? Remaining is excess. After having paid 3 on application, he did not pay the allotment money of 4 rupee 50 paise including premium, and on subsequent failure to pay the first call of 2 rupees, shares were forfeited. Fine. So that is the first dealing, right? So according to the question, application is 3 rupees. Allotment is 4 rupee 50 paise, of which 2 rupee 50 paise is SPR. So 2 rupees towards share capital, 2 rupee 50 paise towards SPR. And then first call is 2 rupees. First call is 2 rupees. Alright. So final call will be, has not been made here. Okay. Now, let us pass the forfeiture entry, reissue entry and the reserve entry. So let's first start with the working note. Allotment due. Allotment due is how many shares? 5,000 shares. Okay, allotment due is 2,500 into 4 rupee 50 paise. Excess application money received. This will be adjusted, so less, which is 2,500. That is 5,000 minus 2,500, another 2,500 into application money is 3 rupees per share. So 2,500 into 4 rupee 50 paise works out to 11,250. Excess application money received is 2,500 into 3. He was applied 5,000 shares. He was allotted only 2,500 shares. So remaining 2,500 shares into application money per share works out to 7,500. So that means the net allotment in arrears is only 3,750. Now, out of the allotment due, that is 11,250, 2,500 into 2 will go to share capital, and 2,500 into 2 rupee 50 paise will go to SPR account, because allotment installment is 4 rupee 50 paise. Out of that 4 rupee, 2 rupees share capital and 2 rupee 50 is towards SPR. Right? So any excess we receive, the first it should be adjusted towards the share capital, and if any remaining is there, if anything remains after adjusting, should be adjusted towards the SPR. So from the 7,500, we first utilize 5,000 to adjust allotment to share capital due, and then the remaining 2,500 towards the SPR dues. So in that case, the allotment in arrears is nothing but SPR arrears. Alright. Now let's pass the journal entry for this. And I'm going to do only the forfeiture and reissue entry for this also. So, forfeiture entry. Share capital, account debtor, SPR account debtor, to share allotment account, to share first call account, to share forfeiture account. Number of shares forfeited is 2,500. Called up value is only till the first call. Final call was not made, so let's find out how much it works to. 3 rupee plus 2 plus 2. So 7 rupee 50 paise. No, just 7 rupees. 3 plus 2 5, 5 plus 2 7. So 2,500 into 7. SPR due is 3,750. Share allotment will also be 3,750. Share first call will be 2,500 into call money of 2 rupee per share. And share forfeiture, we will find it as a balance figure once we're done with the calculation. So 2,500 into 7 is 17,500. And 2,500 into 2 is 5,000. So that means 12,500 is the forfeiture fee. So this is profit on forfeiting 2,500 shares. So now let's find out how many shares are reissued here. These shares were reissued, so that means the entire shares that is being forfeited was reissued. This was not the case in the previous question where 1,500 shares forfeited, only 1,000 was reissued. So we had to do the variation. Here that is not required because all shares forfeited is being reissued. Bank, so reissue entry. Reissue entry, bank account debtor, reissue prices 8 rupee per share as fully paid up. So 2,500 into 8 to share capital 2,500 into 10. 25,000 and 2,500 into 8 is 20,000. So loss on reissue share forfeiture account is debited by the difference of 20, so it's 5,000 rupees. The number of shares forfeited is same and the reissue number of shares is also same. So then directly I can pass the forfeiture to capital reserve entry, forfeiture or share forfeiture account data to capital reserve. Profit on forfeiture is 2,500. Loss on reissue is 1,000. The number of shares are same here. So 12,500 minus 5,000, 7,500 will be the profit transfer to capital reserve. Now let's check whether we got the answer or not. Yes. So the next question that we are going to start is 76th question, where it is shares allotted under pro-rata basis. Alpha Limited invited application for 75,000 equity shares of rupees 10 each. 4 on application, 4 on application come allotment. First call 3 rupees, so balance 3 on second and final call. Application received for 1 lakh shares. So that means oversubscription. Shares were allotted to all applicants on pro-rata basis. Excess application money received with the application was transferred towards the first call. So this is the normal thing. Like if there is any excess, it's been transferred to allotment generally. But here application allotment is one installment. So any excess at the stage, any excess received from the first installment is transferred towards the second installment, which is first call here. Vibha was allotted 750 shares, failed to pay the first call money, and her shares were immediately forfeited. And then the second call was made. So we have to deal till Vibha properly and then the second call entry. The second call, the amount due on second call was received except on 1,000 shares applied by Monica. Her shares were also forfeited. All the forfeited shares were reissued to Mohit for lump sum of 9,000 as fully paid up. Fine. So let's start with all entries this time, not just the forfeiture and reissue. So first one, application and allotment stage. First we pass the receipt entry. So bank account data to share application account. So application receipt for 1 lakh shares. Application money per share is 4 rupees. So 4 lakh rupees. I've told you this many times and repeating again. The company cannot give one share in excess of what they've issued. Okay, so the company can give only 75,000 shares. So allotted will be 75. Share application account data to share application come allotment. Yeah, because it's one entry here. So right, share application come allotment account data to share capital will be 75,000 into 4. 75,000 into 4. If you want, you can pass a combined entry also or a separate entry. So right now I'm doing a separate entry. Then if you want, you can combine. So 3 lakh. Now the remaining application allotment money will be transferred towards the first call. So share application come allotment account data to share first call, which is out of 4 lakh, 3 lakh is transferred to share capital. So remaining is 1 lakh, which is actually 25,000 into 4. So application stage is over. Application come allotment stage is over. Now let's start with the first call stage. We pass the due entry first. So share first call account data to share capital. 75,000 shares into first call money 3 rupees per share. So 75 into 3, which is works out to 2,25,000. Now, here, Vibha was allotted 750 shares, failed to pay the first call money. So naturally, there is a calls in arrears. But this is under pro-rata. So that means she must have applied more number of shares. So we need to do a working notes for her to find out the exact first call in arrears. So let's do the working note for this. Working note to find Vibha's arrears. Vibha's first call arrears. First call due from her. She's been allotted 750 shares and first call money is 3 rupees per share. So that means 2250. Alright. Now, Vibha comes under pro-rata, which means for every 1 lakh shares applied, the company has allotted only 75,000 shares. So for 1 lakh shares, they have given 75,000 shares. So if you reduce this, you get 100 is to 75, which is 4 is to 3. That means for every 4 shares applied, 3 shares allotted. For every 4 shares applied, 3 shares allotted. Now when it comes to Vibha, applied, allotted. Vibha, generally it is 4 is to 3 ratio. Vibha, they have allotted 750 shares. So find out the number of shares applied. 750 into 4 by 3. And this works to 1000. So that means Vibha applied for 1000 shares and Vibha was allotted only 750 shares. So excess shares is 250. Therefore, excess application cum allotment money is 250 into 4 rupees, which is 1000 rupees. So 1002 rupee would be her first call in arrears. Clear? Now let's pass the journals for this. Bank account data. Calls in arrears account data. To share first call account. Okay. Now, since we already received 1 lakh from the application allotment stage, this will be first adjusted. So out of 2,25,000 due, 1 lakh is already received. So what we are supposed to receive is only remaining 1,25,000. This is 2,25,000 allotment due, first call due, minus 1 lakh that we have already received excess from application stage, which is transferred towards the first call. So at the first call stage, we have to receive only 1,25,000, in which Vibha has not paid 1,250. I've already shown you the working out of that. Now this minus that, the figure will be 1,23,750. This you can take it as a balancing figure. Difference between 1,25,000 minus 1,250. The first call entry is over. Now let's pass the forfeiture entry. The shares were immediately forfeited after the first call. So forfeiture entry for Vibha. So forfeiture entry of Vibha share. Share capital account data. Number of shares is 750. Called up value is 4 rupee application and allotment. and 3 rupee first call, so 7 rupees. 2 share first call in arrears. First call in arrears, or you just can write it as calls in arrears also. So if you maintain calls in arrears, write calls in arrears. So calls in arrears, account, which is 1250, and 2 share forfeiture, whatever she has paid so far. So 750 into 7, 5250 minus 1250, which is 4000 rupees. Profit on forfeiture of Vibar shares. Then the second call entry will come. Now second call, second and final call, I guess. Second and final call entry. So receipt entry, due entry of second and final call, share second, and final call, account data to share capital account. Now, since we forfeited Vibar shares, the number of shares for which the the final call can be made will be 75,000 shares were issued initially. 750 of Vibar shares is taken back. So remaining number of shares will be 74,250. And first call will be calculated only on these many shares, which is, and I think final call and 3 rupees per share. So into 3. So 74,250 into 3. 74,250 into 3, which is 2,22,750. Since we forfeited Vivar shares, 750 shares is with the company. Remaining 74,250 shares are with the public. So the second call will be only on those many shares. Now, bank entry of second call, receipt entry. Bank account data. Again, here also there is a calls in arrears, or second and final call in arrears. Second call in arrears. To share second and final call. Now here, if you see, the second call was received for all except on 1000 shares applied by Monica. Now, Monica applied for 1000 shares. Again, we need to find out how many shares were allotted to her. Monica applied for 1000 shares. So ratio we know 4:3. For every 4 shares applied, 3 shares were allotted. She was applied 1000 shares. Find out the number of shares allotted to her. So that will work out to 750 only. 1000 into 3 by 4. So this will be 750 again. Okay. So Monica 750 shares were allotted, and she didn't pay the second call money. So 750 into 3 will be second call in arrears. Okay. And just fill the figure, you will get the, so share, this will be 2,22,750, and that is 750 into 3, which is 2,250. This minus that, 222,750 will be 2,20,500. This is the bank entry of the second call. Now, the shares of, the second person is also forfeited. Afterwards, second call was made, the second call was received, 1000 shares applied by Monica. Her shares were forfeited. So now, pass the forfeiture entry for Monica. Now, forfeiture entry for Monica of forfeiture of Monica share. Share capital account data to share second and final call, or you can simply write it calls in arrears. To share forfeiture. She is a holder of 750 shares and called her value is 10 rupees. So 75 followed by 3 zeros. Second call in arrears, it's 2250. So remaining will be share forfeiture. 7500 minus 2250, which is 5250. So Monica shares is also forfeited. Now all of the shares that's been forfeited were reissued to Mohit at 9000 rupees fully paid up. Now let's pass the reissue entry. Bank account debtor 9000 rupees. To share capital account. Now, how many shares? 750 taken from Vibha and 750 taken from Monica. So totally 1500 shares. All these shares were reissued to Mohit for 9000 rupees as fully paid up. So 1500 shares into 10. 15,000. So that means loss on reissue, share forfeiture account will be debited by 6,000 rupees. Clear? Okay, so there is two forfeitures here. First, we forfeited Vibha share where we made a profit of 4,000 rupees. When Vibha shares were forfeited, the company made a profit of 4,000 rupees. When Monica shares were forfeited, the company made a profit of 5,250. And when all these shares were reissued to Mohit, the company made a loss of 6,000. Right? Now, therefore, the capital reserve entry will be share forfeiture account debtor to capital reserve 4,000 plus 5,000 minus 4,000 minus 5,250 minus 6,000. So that works out to 3,000. So let's see whether we're getting the answer or not. Yes. So this is the sum where there is two different forfeiture. One comes under pro-rata, another comes under pro-rata, but there is no excess because the default is made at the second and final call. If you understood this, please do this sum once again and try more sums of this type. Thank you.